Let's take a look at some information charts on Cardano for BraveNewCoin. So Cardano is a proof of stake blockchain that is semi-decentralized, depending on how you want to look at it or categorize it. As with any proof of stake chain with smart contracts, we can look at what does the chain do? What are the validators? What is the inflation rate? What is the roadmap? Is anybody using this thing? Are there NFTs? We'll look at all that. Historically, I've not been a massive fan of Cardano. I've only talked about Cardano because I'm contractually obligated to talk about X amount of coins per week. And Cardano was simply one of them. So Cardano began development in 2015. They did a free sale for several months. And since then, it's done not too much, arguably. And only recently has the true maybe vision of the chain actually come to fruition in some ways. Most of the investors here are from Japan at the time, 95% of them. And of course, there's a foundation, all sorts of interesting backstories with IOHK, Emergo, Charles Hoskinson involvement in Ethereum, Charles Hoskinson involvement in Ethereum Classic. The list goes on and on and on. Currently, their focus is Cardano. The roadmap is, amongst all coins, the most specific and arguably impressive. The execution is up to you to decide, but they lay it all out here. Multi-year roadmap. You can dig into this to see what specifically moves the needle for you personally, but they're in between smart contracts and scaling at the moment. So we can look at the proof of stake component. Currently 72% of the total network is being staked, which is basically average. Usually it's between 60 and 80% of the network that's staked. We can look at the pools, which for the most part appear to be a bunch of randoms. There's no standouts here as far as specific exchanges or VCs. It doesn't look super centralized from that perspective. More looks like Tezos than EOS. More looks like what you want to see for decentralization of the network if something is proof of stake. ETH is, for example, probably not going to look like this. ETH, currently, the ETH 2.0 stuff is mainly staked on exchanges, I believe. I don't have the data in front of me, but if you were to look at how much is on Kraken, Coinbase, I think Coinbase is doing ETH 2.0, Lido, other places, most of that's going to be exchanges. Now, these will have varying degrees of fees, which influences sort of where you put your funds if you're interested in staking. So this is a rare case where on-chain stats are actually bullish regardless of how I feel about the chain. I think the chain is a pile of junk, big hunk of junk, but the on-chain stats show you that transaction counts are rising, currently at all-time highs. Asset transactions, which I believe they are considered smart contract transactions, at all-time highs. Staking wallets, all-time highs. So all of this, to me, looks incredibly bullish from on-chain perspective. We'll get to the technicals in a second, but those are not bullish whatsoever. This is the average reward you get if you delegate ADA versus running a pool. This is 10x worse than just lending out USDC right now. It's worse than most other proof of stake chains. So unless you're bullish ADA and you want to be exposed to that volatility risk, you will not be making good money gathering interest here. You're better off just buying a stablecoin, sending it to some lending and borrowing dApp, and being done with it. If you're agnostic about the chain, stablecoins, whatever, the best bang for your buck is not most proof of stake coins. Most proof of stake coins give you a worse return than just stablecoins on lending and borrowing dApps. Transaction counts, like I already said, at all-time highs. We can zoom way out, and you can see in the early years, there was almost no activity on Cardano. That started to pick up as proof of stake stuff took off, and now we're seeing smart contracts, asset management in a different way, NFTs. I'm not trying to undersell what Cardano is doing. They're definitely copying ETH, copying everything else, and everybody's copying everybody. It is what it is. They're just reskinning the idea. For all these chains, you want maximum decentralization, maximum throughput, the lowest fees possible, the most people involved, the highest interest rates, whatever it is. But if you stack all of these chains up against each other, there's no real identity between them, in my mind, if you're looking objectively. They're all capable of doing kind of the same stuff, just in different ways. But this is rather bullish to see transaction counts at all-time highs with average transaction values declining. This says that most of this stuff is probably smaller transactions pushing this average down. Looking at NVT versus active addresses also at all-time highs again. Super bullish. NVT continues to decline, which is also super bullish. NVT is a measure of market cap versus on-chain activity. and it's an inverse, so you want this as low as possible. And you can see over the years, utility is finally picking up. And we're seeing this across a lot of alts that have survived since 2017. If they've survived to this point, that means they probably have some use to somebody. So NVT in general has declined. Since 2020, NVT is kind of in this massive range. So I don't think it's super helpful from a trading perspective, but you want this to be as low as possible. Another measure of market cap versus on-chain activity is MVRV. And for most coins, they top out at a 2x multiple on the left-hand axis here, meaning that the market cap can get 2 times greater than on-chain activity before the price kind of rolls over. In 2018, we got to 4. In 2021, we got to 2.5. Currently, we are at 1.5. So this has room for up, certainly, but a lot of the chain as a ratio, I won't say a lot. I guess you could read that as 150%. The market cap is 150% greater than on-chain activity. So it's getting towards overbought conditions. It's not super close, but it's, for most coins, 2 is the magic number, 2x multiple. And as far as downside is concerned, anything below 1 for most coins, again, has been a buy zone. For Cardano, it's gotten as low as 0.3, 0.4. So 0.5 or less is a buy for Cardano. Cardano is also involved in a lot of legacy fund stuff. You know, people can touch it from a legacy realm without getting involved in crypto at all. One way they can do that is through the Grayscale large cap fund. This is closed right now for deposits or whatever they call that, but it is 3.5% of the fund. There's also Bitwise. Cardano is 3.5% of the fund there. So as coins get bigger or smaller, they're going to go in and out of these indices and get different types of attention from different people in different places, which is certainly a good thing if you're an altcoin. They recently announced their wallet's NFT gallery. I'm not an NFT person, so maybe this moves the needle for you. I could care less, but it's a thing, it exists. And you can see your JPEGs in your wallet. It looks like an OpenSea clone is also in the works or getting ready to launch. And of course they have a coin, because why not? They have a presale even. Look at this. You can send your ADA to get the Kata Labs presale. This is the first phase. You know, this is massive opportunity. But it looks like it's going to function just like OpenSea, and you can see they call it a utility token. Whatever. I wish them all the best, but it's going to be tough to steal away the OpenSea dominance in the NFT realm, or just the ETH moat in NFT realm. This website is super fun. Cardano, past 12 months worldwide Google trends, kind of flat, but slowly rising. Again, not super bullish. It's not at the floor. It doesn't look terrible. If we zoom way out for Google trends, even still, it's not at the floor. I am personally just super bearish on the network. I can understand if you're bullish. I can understand if you think this thing is going to go to infinity. You're kind of not wrong based on the on-chain stats. Now, the technicals, however, are another story. As we sit here, this is the 15 to 200, the VPVR volume profile of the visible range. Volume RSI, this is on Binance. Volume per day has just flattened out. Nobody cares about this thing anymore based on the volume. Where it sits in the 15 to 200, it's still bullish. It's still above the 200. It's at no risk yet for rolling over. It looks completely fine on trend. I don't hate this as checking off bull stuff. Again, it just looks weaker than BTC and ETH, and we'll look at those relative pairs. But if this thing does drop, it's going to probably return to the 120 area that it was at from March to August. That's the next support down. But if this thing does anything, it's going to need volume. Right now, there just is none on Binance. Here's the cloud. It's below the cloud, bearish TK cross, bullish cloud. So a lot of mixed signals here. All this is telling you now is not the time to be long on the USD pair. You want price above the cloud, bullish TK cross, bullish cloud. That is your go long signal. There is no signal to be long here. There's no signal to hold here. If anything, you're getting ready to close or to open a short here rather. If the cloud flips red with price below the cloud, that's a short entry signal. Now let's say over the next month, this thing flips above the cloud, bullish TK cross, bullish cloud. Yes, that is a long signal again. So the 200 will probably hold price. If it doesn't, it's going to 120. It doesn't look like it's going to skyrocket anytime soon based on trend metrics. The cloud says no, trader, stay out. This needs some time. If we look against BTC, it looks just done, just cooked. The altcoin people absolutely hate me when I say that this stuff isn't going to outperform BTC or ETH, the Link people especially. But you just have to be realistic here. I mean, what do you see? You see a 5,200 death cross coming. Prices at very near multi-month lows, and it just is what it is. It's below the 200. There's no volume support up here. This could remotely create a massive head and shoulders, shoulder head, shoulder to be formed at a later date, with a neckline around basically the current price. That's kind of the best case scenario right now. The likely scenario is this thing just continues its dive down against a BTC and ultimately returns sub 2,500 sats. Volume here as well, just nothing whatsoever. RSI not super oversold yet, but it has gotten there a couple times. So what I'd want to see if I was buying this against BTC is a multi-week bull div on nothing volume, just momentum grinding up slowly as price goes down. Now, if you take this technicals into account with fundamentals, you could argue that there's a massive bull div there because you're getting all of this on-chain activity. Price doesn't care. I trust the technicals more than the fundamentals, but oftentimes the fundamentals will push the technicals to whichever direction they're headed. So as much as I want to count this thing off, maybe this thing does create this massive macro head and shoulders and just dumps to zero in 2022. I don't know. And against ETH, it had this multi-year resistance that it tapped 3 times, finally broke out, and it's just kind of stalled here. It's got like that Batman signal pattern. I don't know. It's some pattern harmonic or something, but death cross here, it's already headed back to its support area, already back in the range. There's really no reason to trade 88 over ETH in my mind. You've got a multi-year range that you're still in. What's the point, right? I wouldn't rotate into 88 from ETH until this thing is all the way down at 22,000 whatever and has some sort of something to tell you that this thing is going to reverse. Previously, it had Adam and Eve here, or really an Eve and an Adam. Just a weird looking double bottom. Here it had a pretty clean inverted head and shoulders with a bull div. So it's all the usual stuff you're looking for. Bull div, chart pattern, volume, something. RSI is basically 0 right now. So maybe you do start to rotate into this, but I just wouldn't touch it. If you are trading low time frame volatility, I guess it's a decent play, but it's just not for me against ETH. Lastly, I'll just mention the ETH fund and DeFi portfolio. I trade for Technique Capital and I'm Finance, a non-custodial portfolio management tool where you can send ETH or USDC or just watch what I'm doing. You can see everything, including AUM, performance, allocation, all the vaults I'm in here on UniComp and Aave, as well as the trades in the trades tab down below. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.